Tata Autocomp acquires IAC Sweden, which is basically International Automotive Components Group. This is the news in Business Line on 25th March. So this IAC Sweden is basically a manufacturer of interior system and components. They cater to the automotive industry, and this company has annual turnover of $800 million. This acquisition is set to deepen the relationship of Tata Autocomp with Europe original equipment manufacturers in passenger and commercial vehicle segment. So this is actually going to help this company to expand the global footprint. This is the news article. But I'm going to focus on what are the finance lessons we can pick up from this. Number one is valuation. So here Tata Autocomp has acquired IAC Sweden. The news article says the company, that is IAC Sweden, has a turnover of $800 million. But the acquisition is not merely based on the turnover. Tata would have looked into their EBITDA, their profit margin, their cash flows, and various other factors. So valuation is one finance lesson here. Number two, what Tata done here is they adopted inorganic growth strategy. Yes, instead of growing their own organization, what they did, they went and acquired an established player who is in the foreign market. This is going to give them immense growth opportunity. Lot of integrations can be done, but it may also come with financial risk. Lesson number three is how this acquisition is financed. Yes, they would have spent huge money in acquiring this company, right? So from where the money has come? Is it from internal accruals, or whether they have raised debt, or whether owners have contributed equity? And what will be the impact of this new funds on the capital structure? Whether the capital structure will be maintained, or whether the debt equity ratio will be affected adversely or positively, and what is going to be the return on equity for owners. So all those questions will come to mind when we look at the financing part. The next finance lesson is synergy. Why they had gone for this acquisition? What is the financial gain? Maybe geographical expansion. They are getting into a big market now. They'll get access to new clients, and probably they'll be able to save on their cost. So there's going to be a cost synergy. But all this will make sense only if they contribute to improvement in profits and cash flow. Lesson 5 is Forex risk. Yes, now Tata has a unit under its control in foreign domain. Okay, so it's a cross-border deal. As a result, it is now exposed to foreign exchange risk because of its own unit as well, and proper hedging is required. Number 6 is consolidated financial statements. Yes, now Tata Autocomp has a unit under its control. So when it prepares its financial statements, it also has to prepare consolidated financial statement. Lesson 7 is financial due diligence. Yes, before making this acquisition, they should have done, or they would have done, a lot of financial due diligence, analyzing the financials of this IAC, looking into their assets, liabilities, tax obligations, what are the hidden risks. This is basically to protect themselves, to safeguard themselves from any possible financial shocks in the future. Lesson number 8 is return on investment. Why they make this investment? To get some return. So when they will get their money back? What is the internal rate of return? What is the net present value? All those factors they would have looked into. And they will also see whether the EPS is going to be accretive or dilutive. Accretive means EPS will increase post acquisition. Dilutive means EPS will decrease post acquisition. So they would have factored that. And finally, this acquisition is not a mere acquiring one company. It is rather a strategic financial planning for them. They are not only focusing on additional revenue, they are focusing on global footprint. They are looking at strong relationship with OEMs, that is original equipment manufacturers, and they are adding a diverse customer base. So that will help them to reduce the concentration risk. So this is actually a finance driven strategy. We have to see how it will work out by looking at its financials in the future.